Hi guys, today we will be discussing about the next two concepts, that is money measurement concept and accounting period concept.
Money measurement concept. The transaction involving money or money's worth will be recorded in the books of the business. Transactions which cannot be expressed in terms of money will not be recorded even if it is useful for the business. Example, even if business has qualified or dedicated employees, they are not recorded as these qualities cannot be expressed in terms of money.
Like qualitative things, that is, things which cannot be expressed in terms of money, cannot be recorded in the business. See, for example, you have a dedicated employee who works 24 into 7 for your company, and you have a person who is less dedicated to you. Maybe both of them will be paid the same salary. So what happens here is the dedication or the talent he has does not count. Instead, the salaries count, and how much the business should pay to both the employees only count. The dedicated employee, because of his dedication, does not be recorded more in the books of accounts.
Accounting period. Measurement of financial position after a long period wouldn't be helpful. Thus, must be done in regular interval. It also would help the interested parties. Thus, the period of interval for which accounts are prepared and presented to ascertain the results and financial position of the business is called accounting period. Therefore, an income statement, profit and loss account, and balance sheet is prepared at the end of the accounting period to depict financial position of the business.
A business may continue for decades, but the ascertainment of financial position or ascertainment of profit and loss should be done in a regular basis, that too for a shorter period. If a business continues for 20 years, it is not practical and it is not helpful when the profit and loss is ascertained during liquidation after 20 years. No. So, profit and loss or the financial position, the position of the assets and liabilities should be ascertained in a shorter period. That is, like for suppose 12 months, and it should be done in a regular basis. Regularity and at proper intervals. And the time period at which the profit and loss or the accounts is prepared and presented is known as the accounting period. And the preparation of the accounting period accounts or presentation of the accounts is should be useful for the interested parties or the stakeholders. These interested parties include creditors, debtors, shareholders, employees, or anybody which is interested in knowing about the business. For them, this accounts should be helpful.
And again, the statement of profit and loss or balance sheet
Is prepared at the end of the accounting period. The end of the accounting period may be on 31st March. So on that date, these accounts should be prepared. And again, why is this prepared? To depict the position of the business. It will give you an idea about how much loss and how much profit, or what are the current situation about the assets and the liability. The balance between the assets and liabilities are depicted through the profit and loss account as well as the balance sheet.
Reference Accountancy 1 by P.K. Lazar.